As for the other major indices in the U.S., the S&P 500 fell just shy of 2%, and the Dow lost nearly 1.5%, pushing it into negative territory for the third quarter. So let's go ahead and take a look at what is moving markets with Michelle Schneider. She's a partner and director of trading research and education for the Market Gauge Group. Michelle, always a pleasure to have you on the show. What's behind this dip or even sell-off that we're seeing on Tuesday?
So what's spooking the market? Let's count the ways. I think the biggest thing right now is people are sort of used to being suspect of government policy. But the one thing that you do not want to be suspect of is the central bank and the Federal Reserve. And they haven't really helped their case over the last several weeks. Of course, they were criticized for their easy monetary policy. And then we had that meeting last week, which was the first time we heard the hints of tapering. And even though tapering hasn't happened yet, we've seen the yields spike ahead of that. That's number one. Obviously, the scandal that has forced a couple of them to retire. And then on top of that, you now have Elizabeth Warren came out today and she said, let's get rid of Powell. He's no good. So none of this is really boding well for the trust that we have on the organization that sets our monetary policy. So there's a real something to keep an eye on right there. And then on top of that, some of the things they've already mentioned, the supply chain issues, the talk now all of a sudden the Fed saying maybe inflation isn't so transitory. Then we have the big debt ceiling conundrum coming up. We have whether or not the Biden budget's going to pass. And then, of course, just from a technical standpoint, you have a lot of these buy the dippers who keep buying dips and buying dips, waking up today and realizing, oh, wow, I'm losing money. And so you've had a lot of the week longs shaken out of the market. So there you go.
I was going to say, it sounds like a lot of moving parts there. And it is interesting how we've relied so much on this trust in the Federal Reserve. And yet the warning signs seem to be all around. They just kind of now we're actually recognizing it and talking about it. Okay, so on another note, we know that there is a so-called global energy crunch on the horizon and prices are being pushed up. So how are energy stocks performing right now?
Well, in the last 4 days, if we just look at the ETF for energy, which is XLE, it's gone up 10% in 4 days. So that's quite a big move for something that's been well underperforming and, of course, outperformed the market today. And that would include a lot of the energy companies like British Petroleum and Valero and Exxon. They've all moved up as well. What's interesting, though, is what's going to happen from here. Because, again, if we look at it from a technical standpoint, we're coming into some resistance. We have the OPEC Plus meeting coming up. They had raised their production. They could wind up loosening the production. And as you also mentioned in the beginning of the show about the fact that we have really basically stopped the shale drilling in this country, but yet we still have a lot of reserves if we let go. We really are seeing what's happening here, which is that we are an oil and gas dependent economy, both here and globally. Alternative energy is just not enough to carry the weight. We have one more type of disaster, whether it be a hurricane, a second wave, or what have you, or the anticipation that consumption will continue to grow while supply issues remain a problem, then we could see energies going much higher.
And I want to go back to something you were talking about earlier, which is the debt ceiling, because as U.S. lawmakers, they work on a deal to raise the debt ceiling. The president of the Federal Reserve Bank of New York actually warned that failing to actually increase that debt limit could have an extreme kind of reaction in markets, while Treasury Secretary Janet Yellen, she said it could lead to a catastrophic event for the economy. What are investors really keeping an eye on when it comes to these negotiations?
Well, I think that today's move down really didn't have much to do with that. And I think because investors are anticipating, if they just look historically, that there'll be some kind of negotiation that will happen. So basically, you have these dire warnings from the Federal Reserve and from the Treasury, but that's to be expected as part of the whole political spectrum. And they have many of opportunities to come out with a deal. They have until the middle of October to be funded. So if we shut down, we can kind of sustain for a while. And it's only if they can't come to some resolution, which politically is unpalatable for both sides, then we can be looking at some dire type of consequences, looking at default, downgrade, et cetera. And let's just hope that doesn't happen.
Right, especially if they've got those deadlines coming up. Now, I want to bring up one more story while we have you here. I know we've talked a lot about the SEC looking to crack down on cryptocurrencies, but it's also now taking on the SPAC sector, with reports saying that the SEC is telling top auditors of special purpose acquisition companies that redeemable shares must be treated as temporary rather than permanent. So how much of an impact could this rule change have moving forward?
Well, basically, exactly that. The SEC told the auditors of these SPACs, these special purpose acquisition companies or blank check companies, that redeemable shares have to be temporary. But it's sort of kind of after the fact, because if you look at what's happened since SPACs, they peaked at the beginning of 2021, where only 10% of shareholders were ever redeeming for cash. Now, at this point, we're at 52.4% of shareholders redeeming for cash. And so what's happening here, and what could happen as a result of the SEC, in an already flailing industry of SPACs, they're basically saying that if any company falls below the capital requirements for whatever index that they're trying to list on, they won't be able to make it. And so a lot of these companies, like, for example, one particular biopharmaceutical company raised $175 million, 97% of their shareholders redeemed, and now they have left with 5.2 million, and I think 5 million is the cutoff. So yeah, trouble.
Michelle Schneider of the Market Gauge Group, giving you straight facts right there. Thank you so much.
Okay, bye-bye.
Time now for a quick break, but when we come back, unethical practices have come into focus.